or not the trend has changed as much as it is to know what to do. Another example of a trade that was taken, here's Euro US dollar on the 4-hour chart. And this one has transitioned, and this is all stuff we talk about. I mean, the transition, this is what we call transition A. We talk about all of this in the course, but this was a great opportunity based on a bottoming tail signal off of support to get long. And here you get a 91 pip move on a 17 pip stop. So in other words, if you risked $500, you would have made almost $3,000. $5 o'clock, yep. I was just watching. I see some of the charts starting to jump around a bit. The Aussie dollar selling off a bit here right now with the rate announcement. I don't know what it was. I'm obviously here with you, but I just see the charts starting to jump around a bit. Volume, I mean, you don't look at volume really with Forex. It's just so liquid that you don't have to worry about it. It's not something that we use as Forex traders. Wow, New Zealand dollar is getting crushed. Oh my God. Crazy action right there. So anyway, sorry about that, guys. Like I said, I was just watching the movement there. I can show you here if we got a little time, yeah, or you look. It's just, I mean it. And you know what? The beauty of it is that New Zealand dollar, U.S. dollar. If you're looking at your charts, it's all kind of just moving in alignment with the trend. It's not really too much of a surprise, at least not in my eyes. You know, the New Zealand dollar, U.S. dollar pair has been in a downtrend, and it's looking lower. And so far, this is just right in alignment with the overall thought process. And by the way, guys, I mean, I put out a video every Monday. If you're not getting it, we put out a video. It's in our newsletter that goes out. It's also on YouTube, and it recaps and looks at each of the major pairs. So you can definitely check that out. It talks about what they did over the past week and where they're going in the coming week. So definitely check that out. It's in the email with the chart of the week that Greg does, that Monday letter that goes out. So you can see it there, or you can just right on the Pristine site, you can see it. Yeah, exactly. It's under the free services. Yes. So in any case, this Euro US dollar here, right? Beautiful move up into resistance. And like I said before, you have to know your levels. You have to know where to get in and where to get out and how to manage positions. What's the minimum start to invest in the Forex? Well, I mean, with our Forex program, outside of the education, you know, just in terms of the account getting set up, is $2,000. I mean, you could get going with less than that, but liquidity-wise and the leverage that you can get, it's not really enough. To be honest, I mean, you like I say, you can get started with less, but it's not necessarily a great idea because you could just churn through it rather quickly, and you're not going to have the guidance that we can provide. Another example here, though, you've got Aussie dollar, Japanese yen. And again, you see exactly where the entry was. You can see where the stop loss is at the moment I captured this. And this one, you know, this one goes back a couple months, February. Like I said, I want to show you a couple different times of year, and to show that it really doesn't matter. Here it is back in late February, towards the beginning of March, and beautiful movement here. This is an 81 pip move on a 20 pip stop. Just simply managing the trade at this juncture. On a standard lot, you're up about $800, and it's still looking higher. If you're trading a mini lot, you're up $80. And look, $80, not a lot, but it's about the process. It's about getting a feel for it, getting your feet wet. As we all know, you have to crawl before you walk and walk before you run. Trading's no different. If you try and just run right out of the gate, you're going to fall right on your face, unfortunately. You may have a little bit of initial success, and that's generally how it goes, right? We all get that initial feel and flavor for the success that can be had, and then we come crashing back down to reality. So that's what you want to avoid. Let me show you some more examples though. Euro yen, this one just a plain old breakdown, right? It was trying to move higher, failed. And keep in mind, I'm not showing you the larger time frame, but that would be part of it as well. But here it is, simple breakdown. You shorted here, took a little bit of time, but boom, 100+ pip move on a 20 pip stop. Just a beautiful move down. So on this one, even if you're trading a mini lot, you're up just over $100. Euro US dollar on the 4-hour chart, pullback into support. You buy it on this, what we call secondary sign of strength. So I didn't get in here. I didn't get in down here at this turn. I actually waited. It came up. It started to consolidate. We got this red bar being ignored. And that's where I took it, over those highs there. You get a 91 pip move on a 45 pip stop. And as you can see, it did end up going higher. But look, I based on the sharp move down, I wasn't necessarily thinking or looking for it to get all the way back up to this high, even though it did. Look, I'm not trying to be greedy. Pigs get slaughtered, as the saying goes. Greed is good, but pigs get slaughtered. So you know what? I'm just looking to take my piece. I'm just looking to get the meat out of the move. I'm not trying to be overly greedy here. Because if you can get the meat out of the move and do it consistently, you're not going to have to worry about anything. You're going to be very happy. Here, US dollar, Canadian dollar. This, like I said, I've traded this one more recently, and I've got another example of US dollar, Canadian dollar to show you that was closed out early this morning. And here, this one was up over 100 pips in a relatively short period of time. But once again, it's simply following the trend. And I'm able to do this without any of those subjective tools that so many others out there say you need. You need this indicator, you need that indicator. All you need is an understanding of price and an understanding of support and resistance levels. Those